You wanted the best. You've got the best podcast. The hottest podcast in the world. The Chris Voss Show, the preeminent podcast with guests so smart you may experience serious brain bleed. The CEOs, authors, thought leaders, visionaries, and motivators. Get ready. Strap yourself in. Keep your hands, arms, and legs inside the vehicle at all times, because you're about to go on a monster education roller coaster with your brain. Now, here's your host, Chris Voss.
Hi, folks. It's Voss here from thechrisvossshow.com. The Chris Voss Show. Welcome to the big show, my family and friends. We certainly appreciate it. Remember, the Chris Voss Show is the family that loves you, but doesn't judge you, at least not as harshly as your mother-in-law. There you go. So welcome to the show, my friends. We're going to be talking about some interesting things today. Yesterday, the Federal Reserve for the United States took its, I believe it's its fifth or seventh, its seventh increase in the federal funds rates. And the reason, it's fifth. But it feels like seven because in two or three of the basis points they've made extra jumps. So that's why it kind of seems a little much to me. I used to own a mortgage company back in the day, and I can remember doing mortgages for 9%. So this is familiar territory for me with seeing the federal funds rate go through the roof. We're going to talk about gold, where to invest, where some places to put your money in safe havens, which are historically smart places to put your money during recessions or coming recessions, or in times like this where the stock market may turn kind of bullish and things get better. We have an amazing money manager on this show today, and he's going to be talking to us about his book that you can check out as well, called Investing in a Recession: Time to Think About Gold. He's recently updated it. Simon J. Popple is on the show with us today, and he's going to be talking about his work at Brookville Capital and his book that you should probably check out. I'd highly recommend it, considering what's going on in the market, because these are times, historically I trained as a stockbroker when I was, I think about 20, and learned stockbroking, day-to-day trading, things of that nature. Gold has always been a bulwark, a full place to go when things go interesting in the recession. Simon is considered by many to be an expert at investing in the gold market. He's recently written the Investing in a Recession book we'll talk about today. It's a beginner's guide in investing in the sector of gold. It covers not only traditional routes, such as buying physical gold, but also his bridge, that's a BRIDGE system for looking at the gold miners. He's helping people who have never invested in the sector before get a better understanding of how he, as a professional investor, goes about it. Welcome to the show, Simon. How are you?
I'm very good. Thanks for having me. Great to be here.
Thanks for coming, Simon. And this is very topical considering the Fed, yesterday just jacked up the rate again. And it feels, like I said, they've done quite a few large jumps. I think half points to 3/4 points, if I recall correctly. So give us your .coms. Where do you want people to order your book up and look you up on the internet to know you better?
Okay. Well, I think the important thing is, take a look at brookvillecapital.com. That's my website. That's where that's where the journey starts. If you think that gold could be for you, then as you mentioned earlier, I've got a book out. But even if you don't buy the book, I'd really suggest you kind of dig a bit deeper and find out more about the gold market.
There you go. Give us an overview of what you do at Brookville Capital.
Well, the business, funnily enough, started off way back in 2008. I was the youngest director of one of the world's largest private property companies. And prior to that, I was head of investment management at another property business. And prior to that, I worked in the city. But initially, I kind of set it up as a capital raising business. But I invested some of my own money, and I caught the eye of Money Week, which is a UK publication, and then Agora Financial, which is one of the world's largest newsletter businesses, sort of I caught their eye, and they basically, both wanted me to write newsletters for them and tell them about what I'm investing in. And as part of that, I used to, have phone calls with some of my subscribers, and if I'm honest, I wasn't massively impressed with their knowledge about investing. So that kind of took me on to writing this book, which is really trying to help people get started investing in the gold sector and realize that, the gold sector is actually a very broad sector. It's not just about one gold company. So that's the whole purpose of the book.
There you go. Now, do you manage people's money there at the
to be honest, I a lot of people have asked me to, but I don't. I don't want to manage their money. The whole idea here is that if you're capable of making money, you're capable of managing your own money, as far as I'm concerned.
There you go. I've done day trading. It's not that hard. Buy low, sell high. That sort of thing. So
a lot of common sense.
There you go. And like I said, I was trained as a stockbroker back around Black Monday days. If anybody remembers the crash of Black Monday, I think that was the 90s, and it was a horrible time to decide to become a stockbroker. So that's probably why I went on to other things. But it actually was a good time in hindsight, considering it was such a bottom that everything was up from there. But gold has always been a safety, a safe haven, a bulwark against recessions, a bulwark against depressions. It's also something people buy when they're kind of worried about. A lot of money is based upon, and you may be able to speak to this if you want to take over this, but normally gold is seen as a bulwark against, most money is printed on behalf of the guarantees of a government. And, there's speculation sometimes that governments might fall. And that would make most of their money worthless, or they come into some sort of monetary crisis. So gold has always been the thing that, anywhere in the world, you can probably get people to accept gold. Am I correct?
Yeah, no, absolutely. I mean, one of the things I love about gold is you can't print it. And gold is one of the few assets that is viewed as valuable anywhere in the world. You can cut a gold bar in half and, it's still worth the same. You can't do the same with a diamond.
Or a dollar bill. If you cut it in half, I think it loses some of its value with the Fed.
Exactly. And so, what I love about gold is, it's currency agnostic as well. Obviously it's priced in dollars, but if you have a bar of gold and there's a problem with pound sterling or US dollars or whatever the currency is, you can always you buy it perhaps in that currency, but then you can sell it in whatever currency you want. And I think that's particularly attractive, especially as a lot of people have got a lot of their money tied up in their property, or perhaps they've got other properties as well, or other assets, they're all denominated in a certain currency. Mm-hmm. So I think there's not only a bit of commodity exposure, but I think there's also a bit of currency exposure, which, I quite like.
There you go. And as of, I believe this is today alone, gold is up. Let's see. I'm not sure if this is an all-time high. So it is going up on a regular basis. It's up $47.80 today. And that's in response to the Federal Reserve yesterday making another increased rate. But you can see, if you look at the graphs right now, it bottomed out sometime in 2016. We were kind of coming back from the recession of the 2008s, and it was bottomed out in 2016. Looks like about 1,056. It's now standing at 2,015.30, and that's live number as of this time. And you can see that in the most recent months since 2020, probably the beginning of the crisis with the COVID, there's been a flight to gold, and it's now in a resurgence. So people are definitely flooding back into gold with what's going on with the Federal Reserve, the markets, and everything else. Your book helps beginners understand what gold is about. Let's give an overview or touch on some of that and why that's important.
Yeah, well, I think that a lot of people, when they invest in a new sector, they think, I'll just get an ETF, or I'll just buy a gold company, or get some physical gold, whatever it is. And don't get me wrong, nothing wrong with any of those. But what I like people to do is to have some diversification. So, what I do in terms of mining stocks, I talk about a fantasy football team. And in terms of soccer, that's, goalkeepers, defenders, midfielders, and forwards. You could have a similar concept with American football. But the whole idea is for a strategy to work, for a team to work, you need players in all the positions.
Yeah.
And, whilst it's exciting to have, the people who get the touchdowns or the forwards who get the goals, you need other players in your strategy to make it win. And basically, what you want is a winning investment. You want a winning team. So what I try and do is I try and help people do that and try and explain to them differences between gold companies. And I think for a lot of people that's pretty important, because they just think a gold company is a gold company and they don't really understand the nuances of them.
There you go. How much of a portfolio should people be putting in gold, or what percentage of their portfolio should they be putting in gold now?
Well, it really depends on, so many factors: your appetite for risk, your age, how you want to get involved. But my view is you should have some. And a lot of people have got none. And now gold's been around for thousands of years. And, that's why I've written the book saying you've got to look at it. And I really think people should at least look at it. If for some reason they don't want to do it, that's their own choice. But I think they should look at it. And, personally, I have a lot, but I don't just have gold. I've got silver, uranium, cobalt, nickel, copper. I've got lots of other commodities as well. But I view gold as my kind of anchor metal.
It definitely is something that's in demand. I mean, this is what countries do. If you've ever watched a video on the Federal Reserve and how countries will send all their gold to the Federal Reserve and they put it in the basement, it's something that is the bulwark against everything. And the gold standard, of course, people talk about that when Nixon took us off the gold standard, but they kind of had to, the way they were printing money for stuff in the Vietnam War and war since, I should add. But the inflationary value of prices and money, and it seems like the U.S. government, I mean, you can be on either side of it. I'm not saying it's good or bad, but they printed a lot of money, especially over like terms of COVID, to balance the economy. And there's lots of game playing that the Federal Reserve does to balance inflation and different things. And so gold has always been a way to do it. So do you recommend just buying gold itself, or what about gold mining stocks? I heard you mention that.
Well, I like to have a bit of everything. I mean, going back to my football analogy, I view physical metal as the kind of stadium, and then the really large multinational companies as my goalkeepers, and then sort of large producers as defenders, and then new to production or about to get into production would be midfielders, and the out-and-out explorers are my forwards. And as I said earlier, I like to have a bit of everything. And if you've got a low appetite for risk, then you probably want to have more of your kind of stadium goalkeepers, defenders. If you've got a higher appetite, you probably want a more attacking formation, more forwards. But I think the basic premise is, you've got to have a bit of everything. And what percentages you have is really down to you and any financial advice you get. But I think that this is one of the big misconceptions that people go, I've got a bit of gold, and that's part of the jigsaw, but it's not the whole jigsaw.
There you go. So should you invest in physical gold, have it shipped to your house, or should you invest in a fund that invests in gold? What's the proper way that you recommend?
Well, that's one of the big misconceptions about physical gold. I mean, do I invest in physical gold? Yes, I do. Do I take delivery of it? Absolutely not. I have it stored and insured by people who know what they're doing. And, so yes, you can have exposure to physical gold, but you don't have to take delivery. You can have it properly insured. Yes, I've got exposure to mining companies. And if you get it right, they can be ridiculous returns. I mean, I got a company called Chalice, which went up over 65 times.
Wow.
But, that is the exception. And so I think, one of the things you need to do is to have a diversified portfolio, bits of money in, different areas. And, that's your strategy for, in my case, it's not just gold. I've got lots of other commodities, but I think that, you could certainly do that for gold if you wanted to. There's potential not just to protect your money, but also make a lot of money.
Yeah, it's something that we're going through this trough. Everybody expects a deep recession. There's lots of layoffs going on here in America. I'm not sure. I think you're on the other side of the world, across the pond there, as they say. I don't know if you guys are experiencing the same sort of layoffs we are, but it
Yeah,
seems like.
we're getting layoffs as well. It's pretty ugly.
hmm And it seems like a lot of companies are reading the tea leaves, at least what they think are the tea leaves, that we're moving to recession. The Fed, if you understand M1 and M2 money policy and how they operate, it's always interesting to see the amateur commentary on like TikTok and social media. And you're like, have you ever read about monetary policy? Do you understand how it works? But it is designed to slow an economy, to cool pricing, to cool inflation. Unfortunately, one of the factors that come out of that is people being laid off and things going on. And sometimes the trough of a recession can be it can be sometimes very short term, but usually it's extended for quite some time. And do you have any predictions that you'd like to make on maybe what the price of gold could go to? I come from a background where it wasn't ever supposed to go over 800, and it's currently riding at 2,000 plus. So,
Well,
what do I know?
I think it's 2,000 plus, and if I'm honest, I don't think we've even kind of started the bad times yet. I mean,
Wow.
there's so here in the UK, we tend to have fixed mortgages, and 2, 5, 10 year, but I think quite a lot of people are on 5-year mortgages. Now, if interest rates are going up and you're only a year, 2, 3 years into your fixed mortgage, it doesn't really impact you or the market, because interest rates going up, you're kind of like shrug your shoulders and go, well, not happy about that, but hopefully they'll come down in the next few years. But those people who've got to refinance, they could be, interest rates could be double, treble what they were when they first bought their house.
Mm-hmm.
And, if they struggle to buy their house with interest rates as they were then, they're going to really struggle, or probably really struggle, to refinance. And I think that, that all takes time. So all these interest rates going up, I think is horrible. But when people have to refinance, it's going to be even worse. And I think there's a lag, and I think it could be over the next couple of years that some of the real pain of these interest rate rises now are actually borne out. So even though there's some stuff happening now, if interest rates don't come down and they continue to go up, and we had inflation out today at north of 10% here in the UK.
Wow.
So, I can't see them coming down anytime soon.
Yeah, and they usually won't. Usually there's a length of time into the trough of the recession that the Federal Reserve will see that it's achieved its correction, and then it will start to slowly unwind that. But even then, it's a slow unwind. It doesn't just come out and go, oh yeah, we're taking all that stuff back we did over 5-7 steps, or how many basis points they did of 0.25%. Because I know at one point, I think one movement was 0.75. And they, in most people's opinions that are in the know, they were really behind on starting that increase to the Fed rate, and now they're playing catch up, and which means we're going to go through a much deeper trough than what we went through. Owning a mortgage company for 20 years, I used to live betting millions of dollars of a portfolio on what Alan Greenspan had for breakfast every morning. So I've lived through that and seen the reaction. I've sold mortgages at 9% interest rates. There was a time where it got that high. It was crazy in the 90s.
We've had at least that in the UK, probably double digits. And, if you can afford double digits, that's fine.
Yeah.
But I think with house prices going up as much as they have done, double-digit mortgages are going to really, really hurt a lot of people. And if we're honest, I think a lot of people, can't afford them. And I bought my first flat in about 1994, and I bought it off, someone who was involved in the property crash in '87. And even back then, it took 7 years? Actually, no more than that, 9 years for them to get out of negative equity. And I think if we have another crash now, it could take even longer. Definitely. And so, I think there could be some pretty tough tough days ahead.
And people need to have bulwarks for this because, number one, like I said, layoffs. Number two, your credit card interest rates. America is big on credit cards. Those are going to go up and through the roof. And, already we've seen wages go up here in the U.S., but even then, the price of stuff has gone through the roof. And, recently we had this whole thing with eggs where eggs were end up, double, triple, I think quadrupling in price. And in fact, they were running out in there was like a run on eggs, which is, weird considering what went through with the thing with the COVID crisis. And we're still dealing with the fallout of that. We're still dealing with supply chain issues and everything else. And so you don't recommend that people buy gold and take delivery of it and like keep it under their mattress, basically.
No, not at all. I mean,
I think I know some people that are doing that actually.
No, I think, find a reputable dealer, get them to. It's a bit like buying fine wine, to be honest. If you buy it through a reputable dealer and you store it and insure it with them, it's never left their premises. So, certainly here in the UK, I'm not sure what it's like in the US, but I can sell my gold back to whoever I bought it from. And there's you pay a slight premium when you buy it, and you sell it at a slight discount. And obviously you've got storage costs and insurance costs as well. But providing it's moved a little bit, you at least wash your face. And I think that's quite an important point because I think on the one hand, gold is an investment, but you can also think of it as a form of insurance as well. Mm. And in these difficult times. If you buy some, if it goes up in value, then you're in a much better space, and it maybe you just hang on to it as a form of insurance. And if it goes up a lot, great, but if it doesn't go up, you're not really that bothered because you view it as insurance. And at the end of the day, if the wall of worry disappears. You can just basically sell it back to whoever you got it from, and if it's never left their premises, they've got no reason to believe, it's anything but what you say it is.
Yeah, and I think it has less of a crash up and down. Right now we're going through this weird banking crisis in America. I don't know if it's spilt over to your end of the world yet, but it likely will.
Yeah, yeah. It's not good.
It's a weird crisis, and there's people pulling their money out of banks. I don't recommend that you maybe pull money out of a healthy bank because you'll help it be unhealthy and contribute to the problem. But it's your money. I mean, you do what you want to do. I'm not giving investment advice at all. But we've seen people that are pulling their money out of regional banks and smaller banks and putting them into the big top banks, which seems a little crazy to me, in my opinion, because, we went through the too big to fail 2008 Lehman Brothers meltdown, and Lehman Brothers was seen as a very solid bank. And so there's that, we're kind of going through this banking crisis where, where do you put your money? Do you leave it in the bank? Do you put it into a fund? Do you put it into something else that's got a guarantee to it? And so a lot of questionable things going on right now, and where a bank can turn upside down in a very short time. We saw 2 or 3 go bad here within the last week. I think maybe 4 or 5 actually that have been in trouble. Buying gold, is going to be a bulwark, and it's not going to have that huge thing where one day it'll just be like, yeah, we're filing bankruptcy today, like FTX or some of these other crazy crypto exchanges. You've seen that one day they seem to be solid in the billions of value, and then all of a sudden they're out of business overnight. You can't get your funds out. Gold is one of those things that isn't going to have a huge crash to it, is what I'm trying to say.
Yeah, I mean, one of the things I like about gold, to be honest, is you've got an all-in sustainable cost of about Newmont, I think, are around, one of the biggest players in the world, if not the biggest player in the world, around 1,200, and that's give or take 100. It's not a bad average to think about. And so if gold goes below, so let's say 1,200, just for the sake of this example, then you'll probably find quite a lot of companies can't produce at a profit, so they mothball it. And therefore your supply goes down significantly, and therefore logically your price should go up. And I think that, if let's say the price is 2,000 now, and you've got a, let's describe it as a soft floor at 1,200. There's an 800 loss on the price, but I think the upside is unlimited. So, personally, I don't think it's going to go down anything like that amount. But if you want to just follow a bit of logic, that's potentially what could happen. And so I quite like the idea of some sort of floor and unlimited upside. So I do like it as an asset class. And I think the other thing to think about is commodities in general. The US is very keen to secure its own supply of a lot of different commodities, and whilst I think gold is very important, it's not all about gold. I think if you've got exposure to some other commodities, especially if the resources in Canada or the US or South America or Australia, wherever it is, that's not a bad thing to invest it in.
So gold sounds like operates a little bit like oil. When prices of oil fall to a certain point, they slow or stop production, huh? Because the value of producing it isn't quite as much, and so that affects supply and demand, and by scrunches supply. So it makes it so that the value go back up again. Is that true?
I think, yeah. I mean, I think oil, on that analysis, yes, I wouldn't disagree with it. I mean, I think oil is probably, if the world's doing well, it needs a lot of power and energy, and therefore oil is important. But in terms of costs of production, people aren't going to make or extract and process oil or extract and process gold unless they're making money doing it. And so if they're losing money, they may be able to afford to lose money for a relatively short period of time, but after a while, they're likely to stop and wait for the price to come back. And if enough of them stop, there's a good chance the price could come back.
Definitely. Yeah, if you look at gold historically over its time, I mean, it holds its value. It does go, we went through a great bull run here, probably an unprecedented bull run of all time, coming back from, COVID and then before that, coming back from the 2008 recession. It was a long drive back. But other than that, I mean, it's, this is the thing that countries build their wealth on, base their money on, et cetera, and gold is, like you said, it's not like if you have a dollar bill printed by the U.S. government, or maybe something in a country that's maybe more unstable than us, the value of that can drop to zero. You've seen India do things with their monetary system and their money where they've said, this bill is now worthless and here's the new bill that you have to have. And, overnight, printed money can go bad, but gold is something you could sell anywhere in the world, probably in a crisis or situation or wielded during if we have a total catastrophe. There's lots of people that predict catastrophes of economic markets, governments, and of course, zombie apocalypse might have gold might be helpful in zombie apocalypse if you believe in that sort of thing. But having some fun with it. Anything? What else have we touched on about that's in your book that you talk about?
Yeah, well, I mean, I think that gold. I don't think anything is bulletproof from an inflation perspective or market crash perspective, but gold has performed better than a lot of asset classes in difficult times. And so that's one of the reasons why I'd urge people to look at it, because I think that as well as looking at it from an investment perspective, as I said earlier, I think an insurance perspective also makes sense. And as you rightly point out, governments are standing behind fiat currencies, which is great. But if they print too much of it, then there's always a risk the public lose confidence. And if they do, they'll probably look for something which they've got more confidence in. And because you can't print gold and other commodities for that matter, I think commodities could have quite a decent run.
Yeah. And this could be a long trough that we're in for. If you look at the Federal Reserve rate, funds rates, if you look at recession data and taming inflation, everything else, these troughs can go for a very long time. And stock markets can fall. You can go into full bull markets. We're already seeing a lot of corrections. Like I say, I mean, even the banks are struggling now with some of their investments and things they've done. Silicon Valley has slowed down quite a bit. Anything more you want to touch on before we go out?
No, look, I think it's so important people look at it. I really do. And it's one of those things that people quite often go, well, I've always looked at bonds and property and equities. I'm not here to say you shouldn't look at those. All I'm saying is you should add gold to that list, and really think about having some in your portfolio.
Definitely. And so they can order the book on your website, and I think you put out a newsletter. It looks like every fortnight or so. Yeah,
what it is, it's that's really. Once people have read the book, if they kind of want me to hold their hand after they've read the book, then I write a newsletter every fortnight, and I've got people signed up to that. And really, what I'm trying to do is re-emphasize a lot of the stuff that's in the book, but also keep them more up to date on what's going on in the world, what I think is relevant, and really kind of help them on the journey to invest in gold.
There you go. All right. So give us your .com so people can find you on the interwebs and order the book.
Yeah, well, if you go to brookvillecapital.com, so that's www.brookvillecapital.com, which is BROOK, V for Victor, ILLE, capital.com. There's a whole load of stuff on gold there, so you have a look at that, which hopefully you'll find useful. And then if you think the book's for you, then you can buy the book or the newsletter. Personally, I'd suggest you start off with the book and then read that, and then if you want to get involved in the newsletter, that's great. But the whole idea of the book is to get you started. It's a beginner's guide, so kick off with that and see how you get on.
There you go. Order up the book. You can get it off his website and find out more about gold investing, and of course learn more about the thing. There's a lot of speculation as to where we're going, how deep this recession might go. We might bounce back very quickly. It might be a long trough. Usually, the Fed's not going to pull back the Federal Reserve rate and lower it until they see that they're deep into recovery and that prices are coming down. And, after going through the run that we've had with the bull market, with crazy housing prices here in America, crazy car prices, I mean, we're already seeing, a lot of things. I'm seeing stuff in the car markets where a lot of dealers are sitting on this giant inventory of cars that they can't sell anymore because people either can't afford to pay the prices because of interest rates going up from borrowing from the Fed, or from just the supply and demand. Everything revolves around supply and demand, and I think that's the beauty of gold is there's not a lot of it. It's a rare item. So there you go. Thank you very much, Simon, for coming on the show and educating our audience today.
That was great, and I really enjoyed it. Thank you very much.
There you go. Thank you. And thanks, Mods, for tuning in. As always, subscribe to the big LinkedIn newsletter. That thing is killing it over there. It's growing pretty rapidly. And what's fun now is LinkedIn finally made it so that the newsletter goes out to everybody on LinkedIn. It doesn't matter if you're connected to me or not. The Chris Voss Show also has one over there as well. You'll see this on. And follow the big LinkedIn group as well. Go to goodreads.com/Chris Voss, youtube.com/Chris Voss. For the show, your family, friends, give us a 5-star review on iTunes. We certainly appreciate that. Thanks for tuning in. Be good to each other. Stay safe. And we'll see you guys next time. And that should have